Hello, hello, hello. Good morning, good morning, good morning. It's already 19th of June 2019. Piotr here, and this is the pre-London Open live market coverage on Light Forex Global YouTube channel. It's my pleasure to be here again with you, 8 a.m. CET. I do believe, and we've seen that yesterday, the upcoming few upcoming days are gonna be very interesting. It's end of the quarter, end of the first half of the year, G20, plenty of different things, and probably we can agree that currency wars officially started yesterday. I'm talking about the I'm talking about the Draghi statement and immediately been confronted with the Mr. President Trump tweet. So it might be and sounds a little bit funny, but believe me, it's not real stuff. If we are going to add that it's a FOMC day today, that we are next Tokyo session we are going to get Bank of Japan, and tomorrow is a Bank of England day. Wow. All right. Anyway, let's start with the risk warning, guys. Please bear in mind trading effects on margin. Trading crypto on margin carries a high level of risk, may not be suitable for all investors who can sustain a loss of some or all initial investment, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. All right, so where we are. What happened yesterday? There was first was the Draghi saying that ECB is ready to add more stimulus. So that was the immediately downside reaction on euro dollar. Then we saw the sudden spike to the upside, and it was based on the tweet from Mr. President Trump that it's completely unfair what Draghi is saying, that it's that he's lowering the euro dollar quotes, so it's unfair, right? And then we saw, if I'm not mistaken, information that the White House is looking for possibility to to cut Powell position as a Fed chair. Of course, market reacted negatively. All of this, and to be honest with you, I have no idea how is that possible. All of this was very positively taken by the bulls when we are talking about the indices. Nasdaq hit super supply level, and that's where we are going to start with, right? I'm going to watch FOMC very carefully today, because I do believe if bears do have the plan to make the turnaround, so FOMC day, it might be one of the best opportunity when you can expect, and most probably you are going to get the liquidity, so you are going to have the opposite side, right? So if you remember, and we were discussing this plenty of time already, if you remember the scenario with over under, that's in my opinion last chance, and it appears yesterday. So there is a little bit of the upper shadow, right? A little bit of the upper shadow, but because of FOMC later today, right? I do believe we might see another spike to the upside, some kind of the manipulation, trying to take out yesterday high. That might be the case, all right? We will see. But if there is a place where the bulls and bears are going to fight, where the bears will try to make the turnaround, we are right here, right now, at this very moment since yesterday, all right? So very interesting stuff is going on the Nasdaq. And of course, we are going to watch what is going on around the FOMC. Why? Because we are covering FOMC live today, and you are more than welcome to join me quarter to 8 p.m. CET. Other words, 15 minutes ahead of the FOMC announcement, we will start a live stream here on the Light Forex Global YouTube channel, and we are going to cover FOMC live. It might be very, very interesting event, right? So yeah, watching very carefully. So what's the plan here with Nasdaq? Let me clean some lines over here. There was not one-to-one. All right, so what's the plan? Ideally, I would like to see. Wait. Ideally, I would like to see attempt to go higher. Some kind of the stop hunt, just tiny stop hunt, right? Above yesterday high, like this. The key here, it might not happen, guys. It might not happen. It has to be, we have to watch it carefully. Ideally, it would be the whole price action I would like to see during the cash market. But it might happen. We are going to see this attempt to break higher ahead of the cash open, meaning during the pre-market hours, then some kind of the strong rejection, then just retest of this 7,700 based on my chart, right? And price action like this. So that's my scenario, right? For Nasdaq. Be careful here. Be careful here. That's probably from the intraday perspective first line of the defense, right? It's okay. It's 100 points lower from the high, so that might be, we might use that zone as a first profit target eventually, right? But it's what we discussed yesterday during the educational webinar. This type of the price action might be here. So that's first target. Where we have another target. Another target is somewhere here, and it's related to latest market weakness. So that's the breakdown here. So that's the first market weakness. The second market weakness is closer to these levels. But what is important, I will try to point it out here. What is important, after the break of this line, 7,350, market never looked back, right? After the first break of this 7,250, we saw the pullback, retest and rally, right? So I think much more important is this yellow 7,350, but that's, come on, that's gonna be like 300 points from the top. Nice, 5% pullback. So that's where I'm gonna to look for opportunities, right? When we are talking about the Nasdaq, that's where I think if something may happen, it probably will happen around the FOMC. So we are going to see some kind of the manipulation, all right? And yeah, of course, over the course of the day, it might be that we are not gonna try to hit the stops to the upside. That first we will try to revisit the lower levels. Then, based on FOMC outcome, market will try to really hit that stops, and the whole idea with the sell-off will take place, for example, tomorrow. All right? Hopefully that makes sense. So that's how I see the things on the Nasdaq. Now, before we switch to the FX, let's have a look what we have on the agenda. We just got German PPI, so producer inflations, and it's weak, it's weak, it's weak. So there you go. It should be visible on the chat window, inside the chat window. Then we are waiting for UK CPI 10:30 a.m. CET, and we like these types of the events, and we are going to cover this event live. So after we finish pre-London Open live market coverage, 1 hour 30 minutes later, 10:15 a.m. CET, we are going to start UK CPI live market coverage, and you are of course more than welcome to join me, right? Especially that the pound yesterday showed some signs of life, and of course we are going to discuss in more details the pound during the UK CPI. Congratulations to all of you. I'm just going to get back for a second to the trading plan we had yesterday based on this educational webinar. So congratulations to everyone who tested the strategy we discussed, because it was to the pip without the drawdown. Everything was live before that happened. All right? Before that happened, without the drawdown. For those who were not able to participate yesterday, probably today or tomorrow, because the event was recorded yesterday, is going to be uploaded and gonna be available on the archive section here on Global Light Forex YouTube channel. All right. What we were discussing, we were looking for a plan because of the whole price action. We talk about this half an hour, but it was worth to talk about half an hour. We had exact entry to the pip, and we had exact target, first target to the pip. So I'm going to repeat it, but it's not the history I'm talking about. We covered it live yesterday, before that happened. So we were looking for possibility that market will finish their business. What does it mean? You have to get back and watch the yesterday webinar, educational webinar. And this very deep, based on the price action to the left side, to the pip. That was our entry, with the 1 pip stop below the low. Hi Mer, how you doing? Hopefully everything is alright. So what we had yesterday, it was like max 8 pip stop or 9, 27 to the upside was 3R, but we knew what we are targeting. We were targeting the upper side of this yellow supply over here, based on what we've seen as an unfinished business on the early chart. And I have to tell about that. So it was 55 minus spread. All right, it was like 50 pips, and we had like 7-8 stop, so it was 7R. Hopefully holiday was great, Mer. Great, thanks for info. So why I'm telling about this? Because we are sharing very valuable stuff for free. And some, I know, some may say, if it's free, it's not good. We are sharing here the most valuable stuff for free. I'm not saying it's going to work 100% of the time, but if it's working like this. And we spent whole day yesterday going through the details about the possible supply demand. Then we were talking about some tricks based on the swings, and one of this we used yesterday to create the buying opportunity on the pound. Okay, that's it. We are going to get back and we are going to talk about the pound. We are going to talk about euro pound, pound Swiss franc. It was another buying opportunity discussed during the UK CPI meeting. All right. I'm not sure I'm gonna be interested in the pound USD during the UK CPI because of the FOMC. That might be completely different game here, but in case of the positive CPI, and we were discussing it yesterday as well, short term, if we are going to get the mix of the positive CPI, a little bit of the hawkishness from the Bank of England, we might see pound skying high, right? Some kind of the short covering where the weakest shorts might be forced to close their positions, right? Of course, medium long term, all this Brexit mess still is in. Of course, we don't know the outcome. We don't know next prime minister, and that's the risk even for the pound. But short term, based on previous week Bank of England members' activities, and it was like, yeah, a little bit hawkish there, right? I've been heard by the pound previously, right? But lately pound is trying to do better, so some recoveries took place from my side, right? And that's why I'm so happy what we yesterday did with the pound USD when we are trying to analyze it. All right, we're done with the pound. Now, what else we have on the agenda? Right after the US Open, right after the New York session open, 2:30 p.m. CET, we do have Canadian CPI, and the market expectations are around same what we've seen last time, right? And looks like the Canadian, mostly because of the price action on oil yesterday, the Canadian dollar was trying to recover a bit. But again, if we are going to use the knowledge we shared yesterday, right, it's worth to check where we are. We may try to narrow that range, right? And if we are talking about the bulls, they should try to step in around the current level, maybe a little bit lower. If we are talking about the bears, they should be more active around the yesterday high. That's where we saw the rejection, right? So towards the Canadian CPI, we might see market trying to hold narrow range inside yesterday, right? That's the latest weakness. If you see the Tokyo low, it's right around here, so I can narrow it that way, and I can then create another range over here. All right, so in that case, for now, I'm going to watch right ahead of the Canadian data what is going on. So in case you are a bull, right, from the intraday perspective, you don't want to see the close. You don't want to see the close back below the yellow demand zone, right? Now, why it's so important? It's a post Canadian job market and post non-farm payrolls, as far as I remember. If I'm not mistaken, that's the post job market, both Canadian and US price action to the downside. So we were able to recover price above this, right? Tokyo, retest of this latest weakness. And we were discussing during the educational webinar yesterday all of this. So we're trying to hold. So again, if you are a bull, you don't want to see the close below the yellow zone, right? So my plan from the bullish perspective is to see eventually manipulation stop count below Tokyo low with quick recovery. That's gonna be visible on a smaller time frame, and the better it's gonna be visible on a smaller time frame. From the bull's perspective, from the bear's perspective, I'm sorry, we wanna hold the range from 24th of May, right? In that case, we are talking about the 1340, 3430, 3475, right? The range over here. So we are closer right now from the bull's perspective that if we are going to get something, we might try to push the higher based on what we have from the intraday perspective, right? Bears are waiting higher, or bears are waiting, conservative bears are waiting for a break below the yellow zone, retest that supply with the continuation to the downside, right? Here right now it might be bullish territory, so I'm not gonna be surprised bulls will try to defend this zone. All right, that's how I see the Canadian dollar and ahead of the Canadian CPI. Then at 4 p.m. CET, we are going to get Mr. Super Mario Draghi again. And there was a little bit of the joke yesterday I made when I asked if we do understand why we see such a Draghi activity these days. Conspiracy theory, right? Because Draghi knows Fed will not cut tonight, right? So he was trying to double down on this, meaning that if he can push euro lower ahead of the FOMC and we are going to get the neutral or a little bit hawkishness from the FOMC, so we might see finally 110. What we are talking about, we made very deep analysis, euro dollar analysis yesterday, started from the monthly chart, right? So let me show you where we are and what we are talking about. It's getting closer to the end of the quarter, right? It's getting closer to the end of the quarter. Now, if we are going to try to visualize, so first monthly candle, all right? Let me hide this one. We have to understand one thing, where we are from the monthly perspective, right? It's okay, it's upper shadow, but as long as we have positive body from the monthly perspective, next month, as long as the low holds, we might see rally. All right, because we were trying to push higher, the latest attempt by bears to push it lower, and as long as it's a positive, we might see rally next month. Now, monthly open is 1161, so watch out. The closer we are getting to the end of the month, end of the quarter, the more important the 1160 is from the monthly perspective. All right, now let's have a look. Where is quarterly open? 1227. So you know what? 1227 Q open. Let's make this note. Let's have them. 1160, 1161 monthly open. Why it's so important right now? Because we are approaching, right? We are approaching end of the month, end of the quarter, right? So I think these two numbers are so important over the course of the next few days. Bulls will try to hold above 1160 and push above 1220. Bears, of course, opposite. From the quarterly perspective, as a higher time frame, might be enough for them to hold the price below 1227. But in that case, we are going to have something similar to the doji, some kind of the indecision from both sides, right? So my suggestion is to remember these numbers, right? Now, we know from the higher time frame, and we also know based on what we discussed yesterday why we have the red range here, right? Because of the latest weakness we've seen around these levels here to the downside, right? Everything was discussed yesterday, step by step, full detail analysis. So let's switch to the smaller time frame. Let's have a look what we have from the daily perspective. Of course, reaction into what Draghi said. That's another thing in relation to why Draghi is so active ahead of the end of the month, end of the quarter, right? He's trying to draw the chart in favor of bears. Anyway, of course, doesn't look great, especially because of those upper shadows. Bears still holding below the weekly open, right? So in that case, we cannot rule it out. Market will try to retest this combination here. All right, and if, of course, if you are going to check the prices, is of course the top of that range is 1160. All right. I do more prefer some spikes downside, maybe 1140 to hit some more stops ahead of the monthly end. But as long as we are above these levels, another defense from the bulls might be in play, right? And of course, we are trapped to what we've seen 20th of March, the range high after the payrolls, still inside the range, right? On euro dollar. So intraday, if you do remember what we did yesterday, there is a still chance with FOMC later today, so very possible manipulation that, so we broke the latest range after Draghi comment. We were trying to get back, so we were retesting what we were retesting. We see what we were retesting over here, holding low. We should generally, theoretically, we should double that range after the break. So we know that we should hit something around 1170 in that case. But we are talking about the intraday price action. So most probably, because of the FOMC event, I think that the intraday low from the 3rd of June over here, that might be some liquidity pool. So not only 1168, but also 1160 might be hit. So this important level, monthly open, we might look for a liquidity over here to hit the green zone. Green zone again represents what is going on a daily chart, all right? So in case of the turnaround, bulls might try to manipulate that way, hitting all the stops, trying to rally off that, trying to get back above the monthly open, trying to fight with weekly open, right? That might be the case. Of course, the main question is how all, because from the rate differentials perspective from yesterday from Draghi, it's clear that we should be on euro dollar, we should be much lower, right? Based on this. The key question here is, in my opinion, how the dollar will react to what is going on in White House. Because I think Mr. President Trump is a little bit too proactive in that field. And not necessarily it might be helpful here, right? So one thing is a chart, right? Because again, taking into consideration especially the rate, interest rate differentials, theoretically being below 110 wouldn't be surprise, right? But we will see. I'm very curious what's going to happen over the course of the day, as well as around the FOMC announcement. The thing is that we have a FOMC announcement at 8 p.m. CET. Then half an hour later, we do have the Powell press conference. And with all this pressure on the Powell, I truly believe he is a professional and he can handle this pressure professionally. But most probably he's going to get a few uncomfortable questions. We'll see. I do expect a little bit bigger volatility during the FOMC than what we've seen lately, right? So yeah, it might be very interesting. And again, you are more than welcome to join me today, 15 minutes ahead of the FOMC announcement. We are going to cover FOMC live here on Light Forex Global YouTube channel. Whew, that was busy morning. Guys, that's it for now. We are going to meet twice today. So we are going to cover live UK CPI. So 15 minutes ahead of the event. You are more than welcome to join me here, Light Forex Global YouTube channel. And we are going to watch what is going on with pound. Here, right now, ahead of the London Open, that's it from me. Be careful. Don't be trapped. And let's try to find few pound trading ideas over the course of the next live stream within 1.5 hours. Have a great morning. See you around. Goodbye.